on the call. So just a minute to do that, if you don't mind. If you're switching on your cameras, great, thank you. That's highly appreciated. Thanks, guys. I'm just going to give it a minute and then we'll dive into the program itself. Okay, I've got quite a few cameras on, so that looks good. Shanine, you'll get a few pics of this and then we'll be able to kick off. Thank you, guys. Right. Excellent. So I think if I can then ask that, colleagues, if you can switch off your cameras. At the same time, if you can just mute during the presentation itself. And I think from our side, a big welcome to you. Thank you for taking the time on fairly short notice to join the session. SABS is extremely excited, with the process that we're embarking on. So by way of introduction, sorry, if you can mute on your side. Sorry, my name is Dinesh Naidu. I'm the general manager within the certification team with a focus that we currently have on local content verification. On the call are a number of colleagues from our local content division, including colleagues from the Department of Public Enterprises, Transnet, Procurement, and Transnet team, and specifically the Procurement team, and then a number of our clients or customers that are going to be undergoing this verification exercise on Transnet projects specifically. We, as I explained, we have on the call SABS auditors as well. So from our perspective, just by kicking off, I just want to acknowledge and thank the Department of Public Enterprises, DPE, for partnering with SABS on this exercise. We indeed are fully ready and wanting to go. We want to also thank the combined effort of the teams in getting us the first round of information that will kick off this verification process. But today's exercise is we realize and recognize that to a lot of you on the call, this process is going to be new. It's going to be sounding to be daunting. And so this exercise is an information sharing exercise for you to ask questions, for us and the SABS audit team to be able to clarify some of the aspects that will be looked at, the kind of information we're going to be looking for, and how we're going to be able to take this process forward. I want to stress at this stage that we want to get these verifications done in the shortest timeframes. So your cooperation, working with the SABS teams, and where you find challenges, by all means, no hesitation to escalate those issues to myself and Masachua, who's going to be presenting this. He's the next presenter. But I think no hesitation from our side, so that the more we're talking to each other, the quicker and the better the information sharing and the quality of the data becomes, and then the quicker the process can be closed out. So with that said, again, a big welcome to you. Thank you for making the time. And I'd like to then hand over to Masachua, who will do the presentation on the process itself. Masachua, if you can share the presentation and proceed. Thank you.
Thank you. Thank you, Dinesh, and a warm welcome to everybody who's joining us on this platform. If I could just get some feedback in terms of whether you can.
Yes, we can, Masachua.
All
good, we can see it there.
Okay. Maybe let me just.
It's on slideshow as well, so it's great. Masachua, you might have muted. If you can just check, you might be on mute.
Okay. Can you hear me now?
Clearly now.
Okay. Thank you once again for joining this session today. I'm going to try to be as quick as possible and as brief as possible to allow for more time for people that are in the session to ask questions. The intention is to prepare you, in particular the companies that will be verified, to prepare you for the verification process. So as opposed to being a one-sided approach in terms of the communication, I'd rather have a more like a dialogue type of a session where I do the presentation, which empowers you in terms of the information that I'm giving you, but at the same time allow for time to engage in those particular areas that may not necessarily be as clear as we want. Okay, colleagues, my presentation covers, it touches a little bit on the explaining the process itself, how we get involved. I think it's quite important just so that you appreciate exactly when we start engaging you, how this whole process evolves, from the moment you submit a tender to the point where you get to be verified. It will touch on that. It will also explain a bit of the verification process, what it entails, and how it's conducted. It touches on the key returnable documents. What is it that we're expecting you to have when we visit you for the verification? What is it that you expect? I've got examples that I have on the slide. I may not necessarily run through the examples, but probably run on one example, just to show you the depth of our verification process, because I don't think time allows us to run through all the 3 examples that I've put up on the slides. But, okay. Thank you. Let's move on. Yeah. Firstly, colleagues, you would know that when you respond to a tender on the designated items, specifically on designated items, the requirement is that the tender, when it's advertised, it must specifically indicate that only locally produced goods will be considered for this particular tender. So when you respond, you normally would have to complete SPD 6.2, which is the standard bidding document, which is the declaration document that you must complete. You also, together with that, you also complete Annexure C, D, and E. Normally, the returnable document, which will be found in the tender document, will be Annexure C. So with you are expected to have retained Annexure D and Annexure E. Annexure D, that is where you record your import components, and Annexure E, that is where you record all your local costs that you've incurred in the production process. So what we're expecting to find is that in your tender document that was submitted, we will find standard bidding document 6.2 and Annexure C. So once that information is actually used to evaluate your tender. So what the procuring entity does, it looks at your declaration, whether the declaration meets the local content requirements. So if your declaration is below the required local content threshold, unfortunately, your submission gets eliminated because you don't meet the primary requirement, which is a local content. If your declaration indicates that your product is within the required local content, then you move on to the next phase. So you get then evaluated on the basis of that. Eventually, you get awarded a tender. The issue here is that the tender is awarded to you on the basis of the declaration that you made. So in other words, there's reliance placed on the declaration that you made, that you have indicated that the product that you are supplying meets the local content requirement. And the circulars that are issued out by the National Treasury, because in the designation process, the National Treasury would issue out the circulars to indicate that these are the products that have been designated. In that circular, it specifically mentions that your tender may be subject to verification. So that is why Annexure D and E will always have to be kept with you to confirm how you arrived at the local content that you declared. So the procuring entity, or I would say government, reserves the right to verify the claim that you made when you submitted your declaration, to say whether the claim that you made was actually correct, because that claim has been used, or it was the claim was relied on when the decision was made to give you the tender. So once that has been done, you get awarded a tender, and what happens is that that information then gets transferred to the DTIC. The procuring entity is required to report to DTIC that they've awarded a tender and the name of the supplier and the name of the procuring entity. That information gets forwarded to SABS as well as the verification agency that conducts verification. And what we do with that information is that there's a process together with DTIC. There's a process to determine which of the products of the projects will be verified. In this particular instance, the DPE came on board, funded the verification process, and therefore the decision about which tenders to be verified was made in consultation with the DPE, DTIC, and the SABS. So there was that engagement that was undertaken to say these are the tenders that were identified for verification purposes. Obviously, there were a lot of consideration. In some instances, it's the value and the timing and so forth, you know. But there was that decision to say which one. I'm not going to spend a lot of time on the process itself, but what I need to indicate is that the process includes the scoping process, the verification process. I'll explain the verification process further as we proceed. I'm not going to spend time on that. But once we've verified, there is a process of approving the results. So once we've verified, we'll talk to you about the results, but even internally, we've got a system that looks at the processes that we undertook to verify and confirm whether in actual fact, yes, the outcome that we've come up with, the outcome of our verification is actually in line with our verification processes. To speak about the verification methodology, when we verify local content, we base the verification on the SANS 1286, which is the of local content for designated sectors. In terms of that process, it requires that, you know, there is a manufacturing taking place in the country for a product to be even considered for local content. So we've therefore come up with a methodology that involves financial verification and technical verification. So the financial verification would look at the trace of all the transactions that you engaged in. In other words, when you buy your input materials, we look at the trace. We trace all those transactions to say this is where you sourced your input materials. This is how much you spent in actually producing the product, and obviously eventually what is, and eventually calculating the local content percentage to say this is the local content percentage. On the other side, the technical verification, it conducts an assessment of the existence of the firm, of the manufacturing facility. Like I said earlier on, that as part of SANS 1286, there's an assessment whether manufacturing did take place in the country. So the technical assessment looks at whether the manufacturing facility is in the country, whether manufacturing is the manufacturing plant is equipped with the right plant and equipment to actually produce the products that you've claimed that you are producing. We look at the capability of the manufacturing plant. If you claim to be producing 20,000 units a day, we look at that. Are you able to do that? And over and above that, we also look at the demand. If your capacity is to produce 20,000 and you've got a tender that requires you to supply 100,000 units, obviously the question would be, how then do you make up for the balance? You know, we look at those and we assess whether that is sufficient to confirm that you are producing. We also look at in terms of the skills and all the technical elements of production that are there to confirm that you actually manufacture. The biggest of all is we look at the completeness of the bill of material. So because of the nature of the calculation, the way we calculate local content, or we verify local content, is that even the formula, it says you don't necessarily calculate local content, but what you do is you identify all the input components you identified all the imported components and say these are all the imported components. And once you've identified all the imported components, then you deduct that from the bid price. Then the assumption is that all that remains is local. So it is important, therefore, for us to have a complete bill of material to actually do that determination. Because if the bill of material is not complete, it may compromise the verification process and the outcome of the verification process. The process itself is broken down. You normally break it down into stages, where we've got the preliminary stage, which involves the planning, the identification of required resources, the identification of time required to do the verification, the costing of the project. Say this is what it will cost. That has largely been done when we get to these particular products. That is actually why you actually received letters indicating to you that we will be doing the verification. It's not, like I said, it's largely been done. There is an element that is still outstanding, where, to my understanding, you've been requested to supply certain information by no later than Wednesday. And that is why we're having this webinar, so that in the event that there's any outstanding information that you're still preparing, at least have an idea of what it is that is expected from you and how to prepare that information, and make sure that at least you are able to meet the deadline for Wednesday to submit the required information. The next phase, which is the field work, is when we start the verification. In other words, when the team visits your plant, your manufacturing facility, to conduct physical verification. Exactly what I was talking about, that this is what the technical auditor does. The technical auditor would visit your facilities, do a proper walkthrough, look at your plant, assess whether you are actually manufacturing. The financial auditor will also come through. They will obviously ask you for invoices to support any claim that you procure. If you're saying you bought input material from supplier PTY, supplier ABC, PTY Ltd down the street, they will want to see documents to that effect, that yes, indeed, you bought from that particular supplier. They will certainly, as part of the field work, there's an element where we have to visit your suppliers. So this is very critical, because there's an expectation that when we do these verifications, we then expect you as the main manufacturer to have a good relationship with your suppliers. We work on the basis of that, that you've got a good relationship with your suppliers, and therefore you are even expected to facilitate arrangements for the SABS team to visit your suppliers. So as part of the verification process, we verify you as the main supplier. We also go to your suppliers, because verification, the local content is not just about, if you're claiming local content on a product that you bought from a South Africa, from a local supplier, that is just not sufficient. Local procurement does not equate to local content. We need to verify that the supplier that you're buying from is actually manufacturing, and at that level, determine how much local content you're getting from that supplier. So there is another process that gets in the way we get engaged with your suppliers to pull out the value add from their perspective and determine whether there's any value add that they come up with in terms of the components that you buy from them. It may also well happen that we go to the next level of supply. In other words, we move from your immediate suppliers to your suppliers of your immediate suppliers. In other words, what we call tier level 3. In our assessment, we call you tier level 1 as the main supplier. Your suppliers, we refer to them as tier level 2. The suppliers to your suppliers, we refer them to tier level 3. So our verification can lead us to tier level 3 or even 4 to some extent, depending on the complexity of the product. So it is quite important that you, as the main manufacturer, you've got good relations with your suppliers, so that the information that you've supplied where you've claimed local content, it's at least substantiated with some form of evidence from your suppliers, and you remain responsible, and that is very critical. Even in the documents that you submit, it specifically stipulates that you remain responsible for the local content that is declared. In other words, if you're claiming local content on an input component from a supplier, you can't pass on the buck to the supplier. It remains your responsibility. The next phase, which is reporting, that is when we're now collating all information that we've gathered throughout the verification process, putting all that together, then calculating the local content, and whether if it's within the stipulated requirement, it's fine. If it's below, we normally have a closing session with you for every audit, for every verification that we conduct. When we're getting closer to the stage of reporting, there will always be a closing meeting with you as a manufacturing company, wherein the results of the verification are shared with you. Where there are issues, where you have got concerns about some of the conclusions made on some of the input components, you can then challenge it with the team that is doing the verification. But the team will always offer you an opportunity to have a sight of what the outcome is, and they'll obviously offer you an opportunity even to clarify if there are certain issues that are not necessarily clear, or you think that were not necessarily dealt with adequately. So you clear that one all at that stage, and eventually when we finalize the report, there is consensus about the outcome. Then eventually we finalize, we issue the report. There's a process which are called the approval spot processes, which then kick in, and where you've been successful in meeting the local content requirements, you get issued with the certificate. There is another element which deals with what comes out of this, the verification reporting. That element obviously touches DPE, Transnet, SABS, and the TTIC. I'm not going to get into that. What we normally advise suppliers is that in your operation, these are key pillars that we think that they help you achieve a high local content level. They're not a must. You can achieve local content without necessarily adopting this model. It is just there to help you. The key element is that you have which is key, that you can, without this, then you cannot, without the first two, you cannot meet your local content. Without a physical plant being in the country, without local manufacturing not happening in the country, you will not be able to meet local content. Those are the key pillars that are certainly, without them, you're not going to. But the use of locally produced input materials is really encouraged, because that increases your local content. Because if imported materials will only come in as an import and will only reduce your local content. So the use of materials that locally produced, not locally sourced, locally produced, that is critical. And the use of local labor also, that is critical. And the duplication of all these processes that I've highlighted from 1 to 4, getting your suppliers to do the same, it increases the local content of what you're buying from them. And lastly, being aware of the requirements of the designation. It's very important that you are aware of the designation requirements. If you are supplying, say, locomotives, you must know what the designation requirements are, because the designation requirements is not just on the overall local content requirement on a locomotive, which, say, for instance, for I think the electric one is 55%. It's not that. It also, the instruction note, if you look at it, it breaks down further the designation requirements. In paragraph 3 of the instruction note, it breaks down the local content requirements into specific components of the locomotive, that you have to be very specific. If you don't meet any of the sub-components of paragraph 3, you do not meet the local content requirements. So your product is not compliant. It's quite important then that you understand paragraph 3 of the circulars, so that you can effectively implement it. The formula that we're going to be using for this verification process, it's LC equals to 1 minus X over Y multiplied by 100, where your X is equals to the imported components. This X is what you would have calculated and reflected on your annexure D. Remember, I spoke about annexure C, D, and E. So on your annexure D, this is the value that you would have captured there. So if you don't capture the correct value, then it will give you the correct local content value. Y is the bid price. So in other words, Y is what you've charged, what you've submitted as a bid price to the procuring entity. In this particular instance, Y is the bid price you submitted to Transnet. The next files is to show you then, I've put up an example of an annexure C. This is an example of an annexure C. If you think of it, if you look at it, it's for a commuter bus. So you would have, I'm sure you're quite familiar with this, where you would have captured the tender price. If there is an exemption, you show that there is an exemption. You show the net value of the product excluding exemption. If there are imported components, again, C13, that is what you would have captured in annexure D. And your C14 is what would be showing in your annexure E. And then in this particular case, if you look at this 30-seater commuter bus, it is sitting at 84%. Yeah. So you would have declared 86%. And when we verify, we want to see how you came up to that 84%. In other words, the figures that are showing in annexure D, this is your annexure D. So your annexure D, if you look at it, it's for all the imported components. That's why you're declaring your imported components. So if you've got an exempted item, it will show up there as the amount exempted, which is now your 74,000, the 96,000 that you're showing under C11. If you look at C11, that is where you're showing your exempted imported components. We need to know what is it that is exempted and how did you arrive at that figure. Normally in your declaration forms, it would be sitting under D as an exempted import. And then you have components that were imported directly by yourself as the person who won the tender. You show that as well in annexure D. Components that are imported by your third party, in other words, by your suppliers. That is why earlier on I said, as a manufacturer, you are as a bidder or a person who's been awarded a bid, you are responsible for local content or contribution that you get from your suppliers. So you need to pick up what the imported component, what is the import element of the products that you are getting through your third party, in other words, your suppliers. And then you capture that, and eventually you come up with the total value of your imported components. Remember, the exchange rate that is applicable for this for a tender is the rate, the exchange rate ruling on the date when the tender was advertised. So when you think about the conversion rate, if you look up there on Annexure C, it shows that the conversion rate for this particular tender is 7 Rand. This would have been the conversion rate applicable on the date when the tender was advertised, midday. So it's the midday port rate that was applicable on the date when the tender was advertised. That is very critical because everybody else on that particular tender must have used the same conversion rate so that we are consistent in applying the conversion from a forex transaction to the rand value. Then you put finally annexure E. That's why you would have captured all your local costs. There's your input materials, the labor costs, all your overheads, and everything. You would have captured that under annexure E. Again, as a manufacturer, there's an expectation that if you show here, for instance, there, if you look at it, if you can see, this guy is saying that sheet steel, he's buying sheet steel from Acelo. So in other words, the expectation is that this guy will have to show us an invoice. You must have your invoices lined up. In preparation for the verification, you must have invoices lined up that will show the procurement fabric sheets from Galvano Textile. That you must also have evidence of that. So you must start collating that information, put together. And so these are the invoices. This is where I buy fabric sheets. This is where I buy steel sheets. This is where I buy rubber materials and so forth, so indicate that here, and so that, and have those copies of invoices in place, so that when the team asks, you are able to provide them with that information to support the claim that you are making. It's very critical. Earlier on, I spoke about looking at the capability or the capacity. It's very critical that when we look at that, if you're buying, say you're manufacturing, and whatever you're manufacturing requires 10,000 meters of sheet steel, and we only see that from ArcelorMittal you only bought 2,000 sheets, 2,000 meters of sheet steel, then we'll certainly ask a question as to where did you get the balance of the steel? It could be that it may have been sitting in your stores, but obviously we will want to see that, some form of an evidence that yes, it has been there. You just didn't buy it because you had it in stores already, because you are in any case in a business that is operational. So, but there'll always be a need to explain and provide evidence in terms of where you got these materials. This is in a nutshell the verification process. So what will be expected of you as the winning bidder is that you keep this information available. You've got this information and you can share that information with them. In the event that you're not a manufacturer, because this is possible, in the event that you are not a manufacturer, but a distributor or a middleman, so you facilitate the trade between the manufacturer and the buying entity, which is the Transnet in this particular case. It is important that you now go back to the manufacturer and make sure that this information is prepared and made available. Because if this information is not available, the approach that we take is that if you can't present evidence of having bought an item from a local supplier, we will deem that item as an import. So if you can't prove that the item was locally manufactured or it has got local content, it will be deemed as an import, and that impacts negatively on your local content. So it's quite important that you have all this information lined up and available for sharing with the auditors, so that to avoid that, the team will obviously always engage, and when there are processes that we engage in to indicate to you that, look, present us with this information. Like I said, that if you can't present evidence, it then gets deemed as import. If you've got an exemption, again, it's critical. Have a copy of your exemption letter and evidence of the cost. In other words, if you've got an exemption for a particular steel, have it deposition the exemption letter and the invoice to support the value of that exemption, so that we are able to calculate and determine what the exemption value was. Remember, exemptions, you do not apply for an exemption after the award of the tender. Exemption should have been applied for before you make submission to Transnet. You can't come back and say, now I've submitted the tender and now there's a requirement for me to meet this local content. I need to go and get an exemption. But in any case, we do not give exemptions. Exemptions are given by the DTIC. What we do as a verification agency is to say, where you've got an exemption, please share that with us, and we will certainly take it into account in calculating that local content percentage. Colleagues, that is in a nutshell what we wanted to explain to you. I can show you an example of a very easy example that we've put together. This is for the bolts and nuts. I thought we should just take a very simple product just to show you exactly how this thing works. So you've got a manufacturer. In other words, the manufacturer who manufactures bolts and nuts. So the manufacturer of bolts and nuts doesn't necessarily make steel. So he buys steel from somebody else. What the manufacturer of bolts and nuts does, he is doing the heat treatment of the bolts and nuts. He's doing the surface finalizing. He's doing the thread forming and the rolling. is probably doing protective coating, or maybe sometimes so outsourcing the protective coating. So he is, if you look at it, are all processes. So he's not necessarily manufacturing the steel that is used to manufacture bolts and nuts. So at this level, we will verify that yes, heat treatment is happening, surface finalizing is happening, thread forming is happening, protective coating is happening. This is how far we can verify from this manufacturer. What then happens is that because we haven't got confirmation of the value, the local content value of steel, it means then that we will have to move to the source. Where did the manufacturer buy steel? The manufacturer bought steel from the steel supplier, which is supplier A in this particular instance. The steel supplier A who is local. Just to clarify this, you might find that steel supplier A is actually a distributor of steel. Steel is actually probably manufactured by, in South Africa, for instance, most of the steel is manufactured by ArcelorMittal, or you might find that it's Columbus Steel. But let's say it's ArcelorMittal. So supplier A, who supplied steel to the steel manufacturer, is actually buying from ArcelorMittal. So our verification will lead us to ArcelorMittal, which is now going to be tier level 3. So you see that we might have to go to the person who's doing the galvanizing, or who's supplying the galvanizing material. This particular is supplier B. So as supplier A, you should have at least have a view of what did you pay, or how much local content are you getting with the galvanizing? How much local content are you getting from the steel? How much local content are you getting from plating? All these processes, which are not necessarily yours, but are through your third-party suppliers. So it's quite important that you get that information to make sure that the verification process is smoother and very quick. I just thought I would give you that example. I'm not going to go through. There's another example we have for the buckets. There's another one there's another one we had put here for the fabric related product. But like I said, I'm not going to waste, we'll open up a floor for discussion so that there's enough time to have this discussion and to respond to any issues of clarity, if any. Thank you so much.
Thank you, Masachwa. Great stuff. I think that was a great presentation. My concern is I think all the suppliers are now not available next week and the week after. You've just scared them away. But I think with that said, Masachwa, I think it was a great presentation. Thanks. I think the suppliers will really appreciate the examples and really giving them an indication of what it involves. So I'm going to just summarize some of the key points that are standouts that I believe each of the suppliers should be taking note of. The first one is info needs to be supplied by the 23rd of September, 23rd of Feb. That's in 2 days. And I think that's critical because that will ensure that this project moves and we get to the timelines that both DPE and SABS want to achieve. The second one, and before it becomes a question, from the colleagues, it's important for me to stress that for this particular project, the Department of Public Enterprises have sponsored the verification activity. So whilst Masachwa's slides refer to costs, there is no hidden cost. There's no surprise to you as the suppliers. These verifications are part of the project itself, and the costs are covered through the DPE project itself. Masachwa touched on an important point, which is the visit to you and a sample of your suppliers. And he made reference to the different tier levels. I think what's very vital with this is the relationship you would have with the suppliers, and for the auditors from SABS to be given access to these suppliers and their suppliers, that it gets down to the final tier. And if the final tier is the mill where the raw material is being made, then that's how far the verification will go. But if we can get that access, and if there's a clear understanding of why SABS fits into this puzzle, and as it's explained by yourselves, it will facilitate the process and it will definitely make the process run smoother. The other important note is the day of the tender, midday in terms of the conversion rate used by all that tendered. And I think that's an important factor that creates consistency in the number itself. And then the last point, I think, which is probably the one that is overarching, and I think, and I'd like to stress that this takes away this whole fear of auditing. It's if you have your documents and records and the trails available, if that information is readily available, it'll enhance the whole audit process. It'll ensure that information flows quite easily. And as you get into the next tier levels, the link is closed out through the audit trail itself. So I think that's an important aspect that you need to look at from your side, briefing your teams on what is expected, but also briefing your suppliers and your suppliers' suppliers so that we can get to the final raw material source and get to that final assessment of the local content percentage. So with that said, I think it's an ideal time now to open the floor to questions. I'd like to deal with the questions through a show of hands. So if there are specific questions, we have on the call other members of the local content verification team, those involved in what Masacho would have referred to as the technical audits, and then those that are involved in the financial component of the audits. But certainly those team members are also available. And so between Masacho and his team, we'll take questions. So colleagues, over to you. I'm looking for a show of hands. Anything that we can offer as points of clarity. That is the intention of this session, so that the more we discuss, the more we share, the smoother the process can run. As we wait for questions, because I'm not seeing any hands at this point, so that means that Masacho has done an excellent job of sharing the information. But there's two things I want to just highlight. The first one relates to the when documentation was shared with the various suppliers, there was a document that made reference to a non-disclosure agreement. This is not a prerequisite for the process, but we shared it up front so that if you as a supplier would like for that non-disclosure agreement to be signed between yourselves and SABS, then we want to initiate that immediately so that it doesn't become a stumbling block in the information sharing. But we can confirm that we, as the South African Bureau of Standards, we've already signed agreements with with DPE, so that from the confidentiality of information and the information sharing, there is a guarantee that that information is under control from a SABS perspective. So I think it was important that that particular aspect is flagged and shared. I think the second one that just relates to what Masacho has already shared around audits and audit activities. And just to let you know that as you share information with SABS and as we start the scoping exercise, we'll very quickly move that into verification. There are a combination of audit teams that are utilized, and some of these utilized auditors don't necessarily work directly for SABS, but that contract to SABS, but they are fully under the control of the SABS process itself. With that, I see there are two hands, and I'd like to take that. I see Winston as the first hand. So Winston, over to yourself, and then we'll go to the representative from MTech. Winston, over to you.
Okay, I'm glad MTech as well has raised the hand. So let me not get into the electrical side of the business. I would like to get into the aggregate side of the business, whereby, let's be honest, the manufacturing of aggregate, it comes from the natural resources of this country. Any man who's in the right state of mind cannot import aggregate. If you import aggregate, then it must be a very special aggregate that is very expensive for you to manufacture or to import. However, in the supply of aggregate and related products, we are subjected to the same verification process on a natural material that is a natural local material. By virtue of it being an aggregate, it should be a local exempted product because it's manufactured locally. Yes, we need to prove that the material is manufactured locally in terms of the suppliers that are around. Very unfortunate, in most of the time, you get to be questioned whether your material is local content or not. Further to that, you've mentioned a very important point, which is the quantities versus production capacity. If a tender has been specified to say you manufacture, you need to provide 1 million tons of a specific aggregate, as an example. However, your production plant, you're only producing 400 or 300,000 tons. Remember, in aggregate, I'm not sure how much people knowledge is when it comes to aggregate production. You don't produce aggregate for it to sit on your floor. It's a cost. It's going to penalize your business. As much as DTI is involved in this process, you are eroding the cash flow of the business by having material that is sitting there and hoping something will happen. In most of the cases, when material has been manufactured and sitting on the floor, the offtake plan has never been given. You always have to hope and pray every time to say you might get a purchase order to remove the material from your floor. And that doesn't happen. You have incurred operational costs to manufacture on a hope, not on a reality. And you find that reality versus hope, those are two different things. And now I would like that to be seen and to be looked into so that it can be able to assist, so that when there's such procurement processes, they need to take into cognizance a zone of natural advantage for the product, the type of product, because it's a stone. Stone is a stone, it's a stone. You'll get it locally. It's South African made. There's no way you can have a stone from Britain. Like you shown some British pounds and pulas there. It's a nice to have. Aggregate is no luxury of hauling in huge trucks of aggregate or ships or airplane to carry stones and bring them into this country. If that can be given a better view so that it doesn't take people into a process of unnecessary verification, but alignment to ensure that the local content in terms of employment creation, which is a very critical part for me as a business, is to say in areas where I supply, I can be able to create work. Whether through partnership with the aggregate manufacturers or partnership with locals in terms of transporters to remove material from plants to sites. So which is a very, very important point. So my question directly to this issue is that how do we balance between required quantities versus production capacity? Because if you come in to verify me to say you've been awarded a specific tender, but however, you're not manufacturing the amounts that is on the tender, I can't manufacture until I get a purchase order. Because if I manufacture and put it there, usually with Transnet, it becomes a challenge. You can manufacture it there because the contract says as and when required. They might require it next year. You've laid the capital now. You end up retrenching people. And you're getting people out of work because you have put all the capital that you're supposed to pay them salaries on. You've laid it now, but there's no offtake from it. So how do you verify based on such issues? Because it's a very, very serious problem for many, many years for those who've been historically supplying Transnet. And I'm sure MTech is raising on the same issues as well. They might have other issues that they will raise in terms of importing of cables and related.
Great stuff. Thank you, Winston. I think that question is certainly appreciated. And I think underlying all of that is all about the creation of, it's about creation of jobs and the labor being local in the South African context. So I think it's an important point. Masacho will definitely respond to that. I think we'll take the question from MTech at the same time because it might be linked. So the colleague from MTech, if you can come in.
Hello, this is Batisha from MTech.
We can hear you. You can proceed. Thank you.
Thank you very much. I just want to confirm on the National Treasury with the DTI exemption. Is it still National Treasury that exempt, or should it be a letter from the DTI that is required?
Great stuff. Masatro will respond to both of those. Masatro, over to you. Thank you.
Thank you. Thank you, colleagues. To start with, Winston, the process of determining capability is not done only by evidence of production, but an assessment of capability is done. So in other words, if you've got so much tons of stone that you may be required to produce, the question is, have you got enough, the place where you're mining the stone, is it sufficient enough to give you the required quantities? That in itself will suffice. You don't have to have extracted the stones and have them there lying around so for us to say, oh yes, you are manufactured. But the fact that you've got right to mine the stone there and it's there, that will suffice to confirm that yes, you are producing locally. So you don't necessarily, like I say, you don't necessarily to have manufactured the product. And the same goes for even, let's move away from a stone and move to a very complex product, you know, the very same product that I put up, which is the bolts and nuts. You don't necessarily to have manufactured that number of bolts and nuts, but your plant should be capable of producing so many bolts and nuts to be able to say, okay, fine, you know, because we're mindful of the fact that you're not going to produce just for the sake of producing, but you produce because there's a demand. So if at the time of producing the demand is, say, 10,000 units, but the tender that you expected to supply to requires 50,000 units, and when you assess your capability, your plant is capable of producing such number of units, that certainly satisfies our requirements. To MTech, the issue of an exemption. The exemption letter, specifically for if you require an exemption, there's an item that you can't find in the country, or there's not sufficient supply for that. That exemption letter, I'll get it from the DTIC. So the DTIC will, if you apply for an exemption, they will do an assessment of whether there is any merit in actually granting an exemption. And if there is, they will grant an exemption. If there isn't any, they satisfied in their own wisdom that there's sufficient supply of that particular item, they'll deny any exemption to that effect. The exemption that you're going to get from Treasury, National Treasury, is if you are applying for an exemption from implementing local content. So those are two things, those are separate things. You are producing locally as a manufacturer, and there's a component that you can't source or you can't find in the country, or it's not sufficient, there's not sufficient units for you to actually satisfy the tender, you can go to DTIC and say, can I get an exemption? Whereas if a procuring entity opts not to implement the local content policy, it can only go to National Treasury for it to be exempted from applying the requirements. So those are, you can't as a producer go to National Treasury. There's nothing you're going to get from there. You can only go to DTIC. I think the clarity that I'm providing is makes sense.
Thanks, Masatro, for that. Colleagues, we have another at least 4 minutes on this particular call. So I just want to see, how we could start the wrap-up process. Winston, I see a follow-up hand from yourself. I'd like to give you that opportunity. Please proceed.
Yeah, but the issue of an invoice that was mentioned, to say you need to have a proof of an invoice. How would you deal with that? Because obviously you're showing the capacity. At the moment that you want an invoice, there's no historical offtake. If you don't have an historical offtake, you are still in a process, you have a letter of agreement with the plant, or if I have a letter of an agreement with MTech or Lafarge or whoever, how I haven't bought it. I'm waiting for a PO because I'm getting into this new tender. I'm hoping to get it. I'm crossing my fingers, praying and fasting for it, and hoping that I get it. And if I don't get it, you come to verify me in the process. One, I've not even received the PO. How would I now have to produce an invoice to prove beyond reasonable doubt that I've once bought this?
Thanks for that, Winston. Zukisa's our auditor on the technical side of audits. I'm going to give him a chance to come in, but just before he does, I just want to also flag that a lot of these projects that are part of this phase of the verification are projects where the tenders have been already awarded and that suppliers already commenced. So we do have a number of cases where the suppliers commenced, and therefore I guess that's where some of the invoicing and records would be possible. I think the whole process of auditing is to follow that audit trail, and where something is not available, then there's good reasons for it. But Zukisa, you can come in and just strengthen that. Alex, we will make that the last question if we can, and then we'll wrap up in the next minute or two. Over to you, Zukisa.
Yes, thank you, Mr. Winston. Thank you very much, Mr. Naidu, for coming through. The answer you've just provided now, it's exactly what I wanted to say. Remember, here we are working with an agreed arrangement. So obviously there is some sort of arrangement in terms of the values and the figures. And maybe at the time that we come and do verification, you have not yet purchased, but there is a process that you are purchasing from someone, so and so. So obviously there's gonna be some sort of documented evidence that stipulate where you're buying, what is the agreement. It could be the tax invoice at that particular time, but however, we will need the actual invoice at the later stage. So it's not going to be a situation where there's absolutely nothing and we're looking for something. So we understand that at some point you will not be able to get everything you need at a go. However, we know that you've got the pool of suppliers. From that pool of suppliers, if you promise you're going to buy from supplier X, but you are still in negotiating the price, therefore we will wait for you to do that. But it's not going to take us 12 months to come back and get that information. What is important is to understand that you run business and people run business. So there is an interlink of activities that makes the project to go. So I wanted to clarify that area. Thank you very much.
Thank you so much, Zukisa, for that. Colleagues, that brings us to the end of this information session. I really do hope the colleagues have benefited from this. I have not received the document. Sorry, I just want to have a look there. Noted, Winston. Winston, the SABS team will liaise with you outside of this session, and we'll bring that to clarity as well. But from our side, I just want to conclude by thanking all of you for making the time. We also hope you've benefited from this information sharing, and that you certainly find that this process becomes, let's call it, easier, smoother, and less daunting. And the bottom line is to look at how can we get to trace as far back into the input material phase, so that we can really get a handle around what is the true local content percentage for that particular product that's being supplied. So colleagues, with that said, I want to thank all of you once again. Can we work towards the 23rd as the first line in the sand or first milestone? And it will then give the SABS team an opportunity to then be engaging with you directly and start to plan the second component, which is the verification activities. So with that said, thank you very much. Thank you for your time. And this meeting is now closed. Thanks a lot.
Thank you. Thank you. Goodbye.
Cheers. Bye.
Thank you, Mr. Naidu.
Thank you, Mr. Naidu.
Thank you.
Thank you. Bye.
Thank you.
Thank you, colleagues.
Thank you.
Thank you, guys. Shanine, I've got another meeting, so I'm just jumping off as well. Thanks, guys. Cheers. Bye.
Thank you. Bye-bye.
There we are.
Done.
It actually went off much better than we anticipated. So, I mean, gosh, 70, 77, even more than that. That's really good.
Yeah, that's a good participation rate. That's almost everybody you've invited was there. I think
Yes.
a few left after quite in the beginning, but that's normal.
Yeah.
So yeah, no, I think the participation rate is there. I've downloaded it all. I'm just going to cancel the video now, stop recording.
Hi, Dinesh.